Thank you for joining us and welcome to Business Incorporated on Channels Television. My name is Chimeze Obi Iwago. On the show today, Airtel Africa profit more than doubles in first report since IPO. And China National Offshore Oil Corporation aims to take a stake in Ugandan oil pipeline. Plus, British Airways to resume flights to Cairo today, Friday. But we get the show started now with the markets. And here on the African continent, the NSE in Nigeria was 0.06% higher at intraday as listed companies released their unaudited financial statements, while the JSE index in South Africa shared 0.32%. Egypt's EGX 30 ended the week negative on Thursday, down 0.79%, and Kenya closed positive on Thursday. And in the Middle East, the markets are closed today. Strong corporate earnings helped Saudi Arabia stock market snap 5 days of losses on Thursday as the index bounced back 0.38%, with Saudi Arabian mining company jumping 6.5% and Sahara International Petrochemical climbing 5.2%. The Qatar index advanced 0.77%, driven by Conglomerate Industries Qatar, which rose 2.5%, while Qatar National Bank was up 0.8%. Abu Dhabi's index added 0.57%, an 8-day of gains on the back of its banking and telecom shares. Meanwhile, Dubai's index snapped a 3-day winning streak and closed down 0.18% as financial and telecom sectors slipped. We're moving now to Europe, where stocks were marginally higher on Friday morning after the European Central Bank suggested it could lower borrowing costs to tackle a slowdown in the Eurozone economy. Earnings releases are also on top gear, and here is Chelsea Delaney to unpack all of that. Good afternoon, Chelsea. We've seen earnings reports from two more American tech giants, Google parent Alphabet and Amazon. How impressive are the results of these two companies?
We're seeing a bit of a divergence between Alphabet, which is Google's parent company, and Amazon. Alphabet reported really strong results. They had a profit of $9.2 billion, which is pretty huge, and a revenue of almost $40 billion. And we've seen the stock sort of surge on that. There had been some concern coming into this report about the health of Alphabet's business. They've seen a bit of a slowdown in their advertising business. They're sort of they were sort of struggling in some different areas. In their previous results, they had actually posted a surprise loss or a surprise earnings miss. So there had been some concern going into this, but it appears that their business is still pretty strong. Amazon's earnings were a little bit different. So Amazon posted stronger revenue than analysts had expected, but they also posted a smaller profit than people had thought was going to come. Amazon's been investing a lot of money into their Prime shipping service. So they basically said earlier this year, we're going to invest $800 million, and we're going to try and get Prime shipping down to 1 day instead of 2 days for free. And so that's really been eating into their profits. And they gave some estimates for profits throughout the rest of the year that were also below what what Wall Street had been expecting. So we did see a decline in the stock. But sort of what Amazon is saying here is that these investments are going to weigh on our profits, for the next couple of quarters, but this is really a long-term investment we're making here and in the future of our business.
Well, while those earnings are coming in, the European Central Bank is leaving interest rates unchanged, while the Federal Reserve is expected next week to cut its lending rate. What does this divergence mean for the markets?
I think, even though the ECB did not cut interest rates this week, some people had expected them to, and the Fed most likely will. The narrative is still the same for investors. The environment that we're moving into is really, we're going to see more stimulative policies. Interest rates are going to remain very low, if not negative, in the Eurozone going forward. So it still is a really supportive environment for for stock investors and for investors in riskier assets, this environment, this policy easing environment should really underpin a lot of assets here. But I think the other place that is going to be really interesting to watch, especially as the Fed cuts or is expected to cut rates next week, is going to be the currency market. So, the currency values are very much influenced by interest rates. All central bankers think about this a lot, and this has become a political touchstone for politicians right now, because nobody wants a stronger currency. Everybody wants a weaker currency. So it'll be really interesting to see how the euro responds to this Fed rate cut and how the dollar responds going forward.
Looking at the week ahead, top Chinese and U.S. trade negotiators are scheduled to meet next week in Shanghai to discuss trade policy. What are investors hoping to see or hear?
I think investors would really like to see any sort of movement on this front. These trade talks have been going on for a while now. They broke down in May over several different issues, and we haven't really seen much progress. I think, the ideal scenario would be a reduction in tariffs on the U.S. side, or any sort of movement on the tariff side. I think that's extremely unlikely, given the rhetoric we've seen out of the U.S. I think tariffs are probably going to stay in place, and I think China also believes that tariffs are going to stay in place. What I think people are going to be looking for is any sort of movement on things like intellectual property transfer, or sort of these technology issues that the U.S. has really been pushing on. Sort of their criticism of China is that they force a lot of U.S. companies to give over their technologies. So I think if there's any sort of movement on that, it'll be very interesting. I think investors just want to see these trade talks not sort of blow up. They would like to see any sort of movement that would really sort of improve the sentiment and markets for just generally China trade tensions.
Sure, we'll look forward to that. Anyway, it's been an interesting week with you, Chelsea. Thank you for those updates. Enjoy the rest of the weekend.